you a global view on how India is looking from a global standpoint. Joining us now is Bob Dole, the Chief Equity Strategist and Senior Portfolio Manager at Nuveen Asset Management. Bob, thanks for joining us. We're speaking to you after a long time. World over, the markets are at record highs. From your vantage point, do you expect this run to continue?
Yes, my view is that the run in equities is likely to continue. Break out the new highs in the U.S. is significant. Brexit fears were overdone, as we know. We've had a rally in oil prices, which prevents some of the financial problems that people were concerned about from getting worse. The key will be economic and, more importantly, earnings growth. And I think we'll get marginally better growth in the U.S. and some other parts of the world, enough for equities to make a bit of a run from here. Not big gains, but worth playing.
Hi, Bob. What's the genesis of this U.S. market rally? Why are markets so buoyant despite issues like Brexit?
I think the genesis of the rally is earnings. Somebody said to me recently, observing that the U.S. stock market was basically flat for 6 quarters. And my response was, yes, earnings have been flat for 6 quarters. Earnings drive stocks. And we're beginning to see improvement in earnings. In the U.S., for example, the earnings recession troughed in the first quarter. Second quarter will be closer to flat year over year. And then the back half of the year, we should get better earnings. So to me, the genesis of the equity rally is improving earnings.
Okay, that's good to hear. How are you and your global partners approaching India now? Are global fund managers increasing their allocation to emerging markets like India?
Being a U.S. equity manager only, I only invest in U.S. equity stocks, but many of my global partners believe that the long-term view of India remains positive. The education, the resource base, the desire to grow, the massive population, all of these things are positive for India. Obviously, emerging markets in general have struggled with the slowing growth in China, the problems with the debt problem, the issues of slowing commodity prices. But we're coming out of some of those things. And of course, that's allowed emerging markets like India to have a bit of a better move in here. And I think there's more to come.
Okay, what's the prognosis for the U.S. markets in the next 6 months? Do you see the Fed raising rates anytime this year? And if they do, how do you expect the markets to react?
So there's no question that a slowdown in global growth, mostly non-U.S. growth, the fear of Brexit has caused the Fed to back off and say we're not ready to raise rates again. I do hope the Fed can raise rates by the end of the calendar year. I think they will. That will mean that the world is calm, that improvement in economic and earnings growth continues. And so from these very, very low levels of Fed rise, I think is good news for the stock market. And I think that will be received such because the fundamentals will have improved.
Okay, well, since you're so optimistic, Bob, tell us about your asset allocation strategy for the rest of the year. Which are the markets that you're most bullish on now?
We have been overweight the U.S. for quite some time. We continue in that mode. While the U.S. has not had great economic earnings growth, it's certainly been better than almost any other major place in the world. And as a result, the U.S. has been the best place to be. The U.S. has led, one, because of better relative economic and earnings growth. Number two, because we've had this comparison for commodities. And when commodities go down, as they have in recent years, that's less of a headwind for the U.S. than many other places. And number three, the dollar in the last few years has generally moved higher. When your currency goes up, generally your markets outperform. And so we have not disturbed our overweight U.S. rating. It won't last forever, but we're still of that mode. And of course, the U.S. is one of the first major markets to make a new high.
Okay, what about the currency market, Bob? Do you see continued strengthening of the U.S. dollar for the rest of the year?
Certainly, the dollar has been key in this regard. The dollar-euro relationship in particular. And of course, we all know the dollar relative to most emerging market currencies over the last few years has generally moved up. Been some weakness of late, and I think that's healthy for the rest of the globe. I'd love a period of relative stability in currencies. We rarely get those, but that would allow the world to settle down and focus on generating growth internally, which has been a challenge for the world as a whole, which is part of the problem. It's why interest rates globally are so low, why PE ratios, multiples have moved up and maybe will move up from here. So I hope we're moving from this low growth, very low interest rates, high PEs to where we can get some earnings growth, and that would be good news. And I think we'll take stable currencies to get there.
Okay, so we've dealt with a lot of events globally, whether it is the Brexit, whether it's the Fed. Nobody's expecting a rate hike, at least until the end of the year. So markets are a bit complacent. What is the next big trigger, according to you, that global markets should watch out for?
I like to be a broken record, but the next big trigger for equity markets is economic and, more importantly, earnings growth. If earnings growth improved, as it looks like we're beginning to see, equities around the world will do somewhat better. If for some reason that comes to a halt and the earnings recession resumes, then we're not in a good place when it comes to equities. Equities drive stock prices in the long run and often in the short run, and that's where we are at the moment.
All right, Bob, we'll leave it at that. Thanks so much for joining in. So that's the word coming in from Bob Dole, saying that he expects the equities to continue to rally in the near term. The genesis of the rally has been the improvement in earnings and positive on the Indian markets. We'll slip into a very short break, but before that, here is